Bitcoin seems to be at a very pivotal point, and a lot of people saying we're about to have a major breakout. We have lots of new macroeconomic data that might change the Fed's mind on both easing up on quantitative tightening as well as loosening up the interest rates. We're going to talk about all this and more today, so stay tuned. If you're not a subscriber, we have new episodes every single day, so make sure to hit that subscribe button. If you like what you see today, if it at all interests you, please hit the like button as well. With that, let's get going. We're talking about Bitcoin today, and a lot of people are thinking we're right in the midst of a breakout. So let's go through and review a little bit of economic data. This past week, the economic reports were very much in the favor of dropping the rates for the Fed, and let's take a look at that. So consumer optimism falling is below expected results. Wholesale inventories came in line. Jobless claims came in line. But here's the big news. Here's the really big news. Remember, the Fed's job is not to pump your bags. The Fed's job is not to watch out over the stock market. It's to make sure inflation is in check. And so consumer price index is a measurement of inflation. It's a measurement of a cost of a basket of goods a normal consumer might buy. And it was expected to come in at 0.1, an increase of 0.1%, and it actually came in at a decrease of 0.1%. So that means the CPI year over year is 2.4%, and it was expected to be 2.6%. I know that doesn't sound like a lot, but that difference is huge. And remember, the Fed's target is 2%, and this is decelerating at a faster rate. So the Fed is behind the curve right now. They are, it's like steering a freighter. If you oversteer it, it takes a lot to steer it back the other direction. So right now, the interest rates, the inflation rate's probably under 2%, because remember, we're looking at a rearview mirror to see what's going on. So that core CPI, lower than expected. If you go down to Friday's results, PPI, the producer price index, it's the cost of the goods that are made to be sold, came in well under expected. Negative 0.4 is expected to come in at 0.2. Core PPI also came in well under expected. PPI year over year still. So all of this data really points to one thing, and it points to Fed getting ready to loosen monetary policy. So whether that be in not selling as many mortgage-backed securities, they're still selling $5 billion a month of treasuries. They were selling $25 billion. They are selling $35 billion of mortgage-backed securities because they really want to keep those mortgage rates inflated so people don't run out and buy houses, because that would cause more inflation, they think. Well, I also think the housing market is in trouble if we don't drop the rates a little bit, but maybe they want the housing market to bleed, which would be bad for the American consumer. But the argument would be that the prices are inflated and the cost of buying homes is too much. I don't necessarily agree or disagree with that, but let's move on. So Fed, the chance of them dropping the rate this next meeting in May is about 40%. But if you go look at June, it's almost a guarantee in June. There's about a 70% chance they're going to drop at 25 to 50 basis points. You go to the end of the year, you're looking at 100 to 125 basis points of very strong correlation to that. Now, listen, here's the thing, is all this can change with more data or major events. This is predictions. Predictions change as more information comes into play. And I look at the market right now, and the crypto market, it's been good for the last week or so. A lot of coins, Fartcoin, month, not great. Most coins are down. There's some that are up. But it goes back to the breakout. Now, let's take a look at where Bitcoin is right now. We've been on this downward descending channel, which has now become a wedge since Inauguration Day. Now, if you look at the MACD, moving average convergence divergence, you can see that we crossed over pretty much, we were on the way down pretty much on Inauguration Day all the way through. And you see we just crossed over the 10-year or 10-day just crossed over a 5-day moving average on the way up. And you see we've broken out of this downward descending wedge. Some can argue that could be pushed up a little bit, but we still have broken out of this downward descending wedge. Will we hold? We've held one candle outside of that. And a lot of people are talking about a breakout. We've also, if you get really deep in there, if you're really a technical person, we've passed above the 20-day moving average, which we haven't been above in a while. We've been pushing up against it. We've risen above it before, but all these things, obviously this is technical analysis, actual data, actual news, events, things like that can easily change this. But a lot of people are talking about the breakout, Bitcoin breakout loading. You look at Mr. Crypto says Bitcoin continuation pattern, like they're saying there's going to be a breakout, and all the, a lot of talk, Bitcoin rebounds, breakout imminent, things like that. There's a lot of talk of a breakout of Bitcoin. What do I think is going to happen? Well, you can't ignore this data that we've had. Inflation is the thing in which the Fed is looking at so they can, have proper monetary policy. So the Fed is looking at this and saying, well, inflation's on cooling down, but they're very worried right now. They're still very worried about inflation due to tariffs. Now, there's a narrative that tariffs cause inflation. I don't 100% agree with that. But what we're going to see is that battle with China. We're going to see United States make deals. There's a lot of pressure on the entire planet to make a deal, to move tariffs along so economies can move on. There's a lot of sentiment out there that's a wait and see type policy. Now, that alone is going to hurt hiring. It's going to hurt people's spending habits. It's going to hurt consumer sentiment. Because if you're just saying, I got to wait to find out what's going to happen with these tariffs, pressure will continue to mount on waiting. It'll continue to mount. People won't move. They'll freeze. They don't want to make a move left or right because they're not sure what's going to happen. Should I spend money right now? Should I go out and buy that big purchase? Or should I wait to see what happens? And that's what people do. They wait to see what happens. But because of this, it's going to be, like they say, a self-fulfilling prophecy, as that people aren't going to run out to make the purchases. It's going to hurt employment numbers. It's going to hurt outlooks and forecasts. And the Fed is going to see inflation dip faster than expected. And they're going to move in to make a move, whether that be to drop the rate or to reduce their quantitative tightening, reduce the the sale of these mortgage-backed securities or treasuries. But I don't think they're going to do nothing. And when the money printer pumps, it rises all ships. I mean, typically crypto pumps, stocks pump. This isn't financial advice. I'm not your financial advisor. I'm just telling you what I've seen in the past, and what could happen this time doesn't mean it will. Past performance is certainly not indicative of future results. I say that because I have to remind everyone, just because it happened before doesn't mean it's going to happen again. So a lot of exciting things. I mean, a lot of exciting things going on in the marketplace. And so, I am taking advantage of this a couple different ways. I do buy and hold crypto. I hold it across a couple different exchanges, and I buy and hold that stuff. And I haven't bought a ton lately, pretty heavily invested. I did buy the last dip. I also use Pionex US trading bots, and I use the EasyBot. EasyBot is just software that through an API sends buy and sell signals to your exchange, so it can help you, have unemotional trading. And I'm going to do a full update on Sunday, April 12th about the 30-day progress of the EasyBot I started, just to show you exactly what goes on. So I'm going to do a full update on that tomorrow. So make sure to tune in tomorrow. If you're not a subscriber and you made it this far, do me one single solitary favor. Hit the subscribe button. And if you are a subscriber and you made it this far, hit the like button. I'd greatly appreciate it. With that, I'll see you next time.